As we close the first week of 2026, global equity markets displayed a mixed but broadly cautious tone, reflecting a delicate balance between optimism for economic resilience and concerns over inflation trajectories and central bank policies. Wall Street, in particular, ended the shortened post-holiday session largely flat, with the major indices hovering close to all-time highs but lacking decisive momentum amid light trading volumes. This subdued activity underscores investors' wait-and-watch stance as they digest the latest developments in monetary policy and macroeconomic indicators. Inflation data released internationally continues to be a focal point. In the United States, recent figures suggest that while headline inflation remains above target, there are tentative signs of easing pressures in certain sectors. However, core inflation metrics still point to underlying stickiness, prompting the Federal Reserve to maintain a cautious approach. This week's Federal Open Market Committee, FOMC, minutes, eagerly anticipated by market participants, reiterated the Fed's readiness to adjust policy as needed but hinted at the possibility of a more dovish stance if inflation continues to moderate. Such signals have lent support to commodities like gold and silver, which have extended their historic rallies amid expectations of less aggressive rate hikes. Across the Atlantic, the European Central Bank, ECB, maintained its hawkish tone, emphasizing vigilance against inflationary risks, especially given energy price volatility. Meanwhile, China's markets experienced modest gains as policymakers reiterated their commitment to supporting economic growth, providing a stabilizing influence in Asia. These global cues shaped investor sentiment and influenced flows into emerging markets, including India. Turning to the Indian stock markets, the week saw a consolidation phase with the Nifty 50, Bank Nifty, and broader indices like the Nifty 500 ending largely unchanged. The Nifty 50 hovered around the 26,000 mark, reflecting a lack of new catalysts to drive a definitive directional move. The Bank Nifty similarly showed resilience near the 59,000 level, though it faced resistance from profit-taking pressures. The Sensex mirrored this cautious mood, closing the week with marginal gains after a period of range-bound trading. Sectorally, the market witnessed a divergence in performance. The defense-oriented Nifty Defense Index outperformed, buoyed by contract wins such as Avantal securing a significant deal from the Ministry of Defense for the comprehensive annual maintenance contract of satellite communication equipment. Metals and media sectors also registered modest gains, supported by positive domestic demand outlooks and stable commodity prices. Conversely, sectors like IT and pharmaceuticals saw slight declines, influenced by mixed global demand signals and profit booking. The PSU Bank Index underperformed marginally, reflecting concerns over asset quality and slower credit growth. In terms of stock-specific developments, a few names drew notable attention this week. Avantal's contract award underscored the strategic importance of defense communications, enhancing investor confidence in the company's growth prospects. While Momo Foods attracted substantial capital infusion from investor Madhusudan Kila, signaling strong faith in the company's ambitious revenue targets for the current fiscal year. Additionally, notable fund management changes were announced by HDFC Mutual Fund, with Chirag Setlavad taking charge of the flagship Flexi Cap Fund, a move closely watched by institutional investors. On the IPO front, Gurugram-based Modern Diagnostic and Research Center is set to debut next week, marking the only public issue slated for the period, while SS Retail has filed draft papers to raise significant capital, indicating robust activity in the primary market space. Brokerage houses have adopted a cautiously optimistic stance for the near term. Analysts generally highlight the importance of monitoring key technical levels in the Nifty 50, particularly the 26,000 to 26,250 zone, which appears to be a critical support and resistance range. While some recommend a consolidation phase ahead of Q3 earnings results, others remain watchful of foreign institutional investor flows and currency volatility, which are likely to influence market momentum. The consensus suggests that sectors such as financials and consumer discretionary may drive equities in 2026, with a preference toward large-cap stocks given their relatively attractive valuations compared to mid- and small-cap counterparts. Looking ahead to next week, market participants will closely monitor domestic auto sales data and Manufacturing Purchasing Managers Index, PMI, figures, which are expected to provide fresh insights into economic activity and demand trends. Internationally, the release of the FOMC minutes and weekly U.S. jobless claims will remain key in shaping expectations around Fed policy and risk sentiment. Additionally, ongoing developments in India-US trade discussions and foreign institutional investor flows will be critical factors to watch, as they have the potential to sway market direction amid an environment of cautious optimism. From a medium-term perspective spanning 2025 to 2026, the outlook suggests that while challenges remain, chief among them being inflation control, geopolitical uncertainties, and global growth moderation, the Indian market is well positioned to benefit from structural factors. These include robust domestic consumption, ongoing reforms, and a favorable demographic profile. Earnings season may reveal a significant divergence, with some sectors and companies outperforming expectations due to improving demand and margin expansion, while others could face headwinds. Investors are advised to remain selective, focusing on quality businesses with strong fundamentals and sustainable growth prospects. Large-cap stocks, particularly in financial services and consumer discretionary, are likely to remain in favor, supported by brokerage recommendations highlighting their relative valuation appeal and resilience. In summary, the first week of 2026 has set a tone of measured caution across global and Indian markets, with investors awaiting clearer signals from economic data and central banks. While domestic equities have consolidated within narrow ranges, underlying sectoral movements and company-specific developments suggest pockets of opportunity. The interplay of global inflation trends, central bank guidance, and domestic economic indicators will continue to dictate market momentum in the near term, while structural growth drivers underpin a cautiously optimistic medium-term narrative. Please note, the views expressed herein are personal and do not constitute investment advice. This commentary is not from a SEBI-registered analyst and should be considered for informational purposes only. Investors are encouraged to conduct their own due diligence or consult with a qualified financial advisor before making investment decisions.